Question number 26. A manufacturer's work in progress at the start of the year was valued $850 is the opening work in progress. At the end, it was 10,200. Closing work in progress is 10,200 while opening is 850. What was the effect of increase on the cost of production and the cost of sales? What was the effect of this increase in the cost of production and the cost of sales? Opening work in progress will be added and closing work in progress is increase. What is the amount of increase? Closing work in progress increase is 10,850 minus 10,200. So the difference is 9,350. It will decrease the cost of production. Work in progress will not added in the total cost of production calculation. So it will decrease the cost of production. It will decrease the cost of sales also. So the correct answer is option A. Question number 27. A trader made the following forecast for the business for the next financial year. They are given average inventory, rate of inventory turnover, markup. What is the question? What are the forecast sales for the next financial year? To know the sales, we have to know first the cost of sales. Because after we done the cost of sales, we can calculate the gross profit by using markup. So cost of sales, they are given the information average inventory, rate of inventory. From this equation, we can calculate the cost of sales. Cost of sales or cost divided by average inventory. Average inventory is 80,000 is equal to 6. This is the rate of inventory turnover ratio. So what is the cost? Cost is equal to 80,000 multiply 6 is equal to 480,000 is the cost. Next, markup. Markup means calculating the gross profit on cost. So gross profit is equal to 480,000 multiply 25 divided by 100. That is 120,000. So cost is 480,000. Gross profit is 120,000. So sales is equal to sales is cost plus gross profit, that is 480,000 plus 120,000, 600,000. So the correct answer is option D. Question number 28. Kim's trade payables turnover increased. Trade payable turnover means the period of business paying to their suppliers or creditors. That is called trade payable turnover. What could have caused this? This is trade payable increased. What will be the reason? Kim's customers took longer to pay. That is trade collection period. Kim's credit purchase increased. No. Kim's sales revenue increased. No. So the correct answer is Kim's took longer to pay her credit suppliers. It is increase means they are taking more period to pay their suppliers. Correct answer is D. Next. Question number 29. A company provided the following information about its rate of inventory turnover. 24 times, 25 times, 27. Rate of turnover ratio, inventory turnover in times means how many times inventory replaced in the business. What would explain these changes? Cost of sales decreasing. No, when inventory is replacing, cost of sales will increase. Inventory is increasing. Inventory is increasing same times. If they are not selling, inventory increase. But when the business sales is increasing, they have to replace the inventory. When sales increase, they have to bring more inventory to the warehouse. So the correct option is sales increasing. Question number 30. A company provided the following information about the current ratio: 2.4, 2.3, 2.4, 2.5. Current ratio is increasing. Current ratio increase means either current asset increasing or current liability decreasing. Current asset divided by current liabilities. So the options are given. What would explain the changes? Maybe current asset increase or current liability decreasing. So the options given: inventory decreasing. No, inventory, when inventory increasing, current ratio increase. Other payables increasing. Liability increasing means current ratio will decrease. Here the current ratio is increasing. So that is wrong. Other receivables increasing. Other receivables means current asset increasing. Trade receivable decreasing? No. So the correct option, when current asset increasing, current ratio increase. Option C is the correct answer.